Hello all, I hope you are doing well in these, and because we haven't used the word enough, in these unprecedented times. Welcome to the Fintech Finance Virtual Arena where we're hosting you today. Today, we're going to be taking a bit of a deep dive look at Moneyhub. And I'm very pleased that joining me today from Moneyhub is Sam Seaton. How are you doing today, Sam? I absolutely love your background. That's amazing.
Well, I'm really pleased you said that because I am obviously biased, so I'm going to love my background, aren't I? That's the right way to start this.
Yeah, no, that's very cool. I'm a big believer with all these kind of things like financial inclusion, understanding your finances. You throw a little bit of pop culture in there, you throw a little bit of things that people enjoy on the consumer side, it just sticks much more in their brains. Hence the map.
Well, yeah, they say, a picture tells 1,000 words, and I think Sharoni, who did this map for us of financial wellness, I think she did it incredibly well. I mean, I think you can tell she has a slight fascination with Lord of the Rings, but we won't hold that against her.
Excellent. Well, let's kick straight into it. Let's have a look at small and medium enterprise. What are the issues that they're facing? What are some of the key issues that small and medium businesses are really kind of up against at the moment?
Well, they probably, many of them are probably very stressed at the moment, I imagine, and rightly so. But I think the three main issues remain for them. I mean, one being they do not do what they're doing to build people. So not one of, an SME never, a small business is never in business to invoice or build people. And I think we forget that sometimes. I mean, they obviously need to build people to get paid. But, going back to your analogy earlier on about the chimpanzee and the combine harvester, he's certainly not doing that, is he, to build people? He's doing it because he loves driving tractors, right? And he loves being outside, in the open space. You won't get that chimpanzee in London for love or money. So I think we've got to remember why the small businesses do what they do, and they do it so well as well, because they love it. They love doing it. And so I think that's one big thing that we forget as an industry servicing them. Secondly, I think it's difficult for them because they are small and nimble by nature. That's brilliant at one level, but it does mean they are limited in terms of bandwidth and resources. So what does that mean? I mean, it doesn't sound too bad, I'm in my combine harvester, and getting on with life. But what it does mean is that I don't really have time to spend thinking about how I could be perhaps more innovative in what I do. I don't have an awful lot of time in terms of resource, which results in money to spend on perhaps exploring different options. So I think sometimes they end up, small businesses, in a little bit of a corner. Not because they want to be in a corner, but because they don't have that bandwidth, resources, and sometimes the disposable income available that a large enterprise kind of has in kind of bucket loads at times. And you've only got to look at Apple, and Apple has, the resources that, we would probably all die for, in terms of innovation and exploration.
I do think there is, and I almost feel that the terminology needs to be updated, but there's a bit of a difference between SMEs, so your restaurant, compared to startups that obviously receive funding via venture capital, which are not going to be profitable or even revenue for, in some cases ever, but for many years. With that in mind though, when it comes to particular SMEs, again the likes of restaurants, how can we solve this cash flow issue that they're facing? Ultimately to ensure that at the end of the day, I'm going to do a misquote, I'm sure it was someone, but I believe it was Henry Ford that said the role of the business is to give as many people as possible meaningful employment. At the end of the day, that's how can a business ensure that it can pay people in the cash chain on time? Yeah, lot of stuff.
Yeah, so it comes back to the main point that, SMEs, but they want to be small by nature. I mean, that is the SMEs. I mean, there's 5.8 million, SMEs in the UK. So that's why the government should be and is incredibly worried about those businesses surviving and doing well. Because if they don't, the economy, will without doubt struggle. So they really want to support them. So I would say that what we need to do, I agree with you. There is a difference between a startup and a restaurant, a hairdresser, plumber, electrician. A lot of my friends teach riding, as an income, so they are trained, equestrian trainers. So, they are not startups. They are by definition small businesses, and they earn a good income doing what they love and contributing to the economy as a result. So in order for us to support that, I think the government has to be responsible at some level with a pandemic on its plate to help keep that going. So for example, with the restaurants, I think it was a great idea what they did last month with the £10, kind of 50% discount up to a maximum of £10. I think that was brilliant because it got people back out using restaurants again where perhaps they had been worried about doing so, and I think it encouraged a little bit more of that. But it is really tricky because, having said that, we've just had that month, and now we've obviously got a rising in infection cases. So there's this very fine line with a pandemic like we've got on our hands about keeping everything going and then keeping people safe. And the government has to try and do both, and it's a difficult line to walk. So I would say, there's not much that you and I can do about that right this second. But what we can do is, while they're walking that line, what we could do, I think, is actually make their lives a bit easier. So we probably can't solve all their problems, but I think we definitely could make actually getting paid easier. It's faster payments have been around since 2008, so more than 10 years. So faster payments is not new, and it isn't new technology or particularly innovative. What is innovative, and what we could genuinely help more of these businesses get paid on time with, is the new legislation in terms of PSD2, where actually anyone can initiate a payment if they're regulated to do so, but you don't need to be a bank. So you no longer need to be a bank to get a payment, and that means that you don't need to use Visa or MasterCard or the traditional mechanisms upon which these small businesses have relied on to get paid. But also, I'd go a step further and say that it's not always necessary to have an accounting system that includes invoices. Because by definition, focusing on making invoicing slicker, to me, is slightly missing the boat. What we want to do is get them paid quicker. So focusing on making invoicing easier, better, faster, I mean, that's great at one level, but I would question whether we're really going to the heart of the issue. And that's actually getting them paid. So this idea that, you can have some way of automating what you need to be paid, QR code, and I paid it, bank to bank, no interchange fees at all, to me feels the disruptive and innovative element that we're slightly not, kind of hitting on for these SMEs.
Question around that. So I'm currently dealing, as an SME, with our morally grey landlords, and all payments are being done with checks. And I said, why has this happened? They said, it's just the way that we've been told to do it. It seems that that's more of a case that they don't want to explore things like faster payments. They want to kind of stick with the culturally that kind of way of paper payments. I don't know whether that's an education thing. I don't know whether that's a simple stubbornness thing. How do you help SMEs when kind of sort of locked into these kind of cultural payments? I don't want to say legacy payments. I want to say cultural payments. How do you help change that mindset?
So it is really tricky. So I think there's two things that can help. I mean, one, I have quite a binary view that any company or person, actually any individual that gets stuck in their ways in an environment where the technology and what we're doing moves at lightning speed, means that you will not survive. So some businesses with that attitude, I think, will not survive. And maybe that's not wrong. Maybe they enjoyed their time in the mode that they were operating, and it's not for them to move into a new world. Maybe that genuinely, you look at some people who've run businesses and get to their 60s and 70s and even 80s actually, and then there comes a point, doesn't there, when they're like, do you know what? I am done. I ran this business the way we ran it, enjoyed it, and it's now not for me to run it in a new world, because I'm not enjoying it. I'm not embracing all this new technology. Faster payments just scares me witless. I much prefer people to get a checkbook out. So I guess if you're in that mindset, I would argue that, you will run your business for a certain period of time, but at some point, it will not it will not be able to survive. So I guess for those people, what I would like to say, because they are the most challenging, so I think you've got that's the most challenging start point, isn't it? Probably not even receptive to change. So for me, what I think would help those people is to a little bit to have a little bit more visibility of what's going on around them in comparable businesses. And I think what the really strong point that is the only thing that I think they need to understand is what is the benefit for them. And sometimes it's for them personally, more for them as a business, because if they're an SME, what do I benefit from if I take on, if I get rid of the checkbook and I take on faster payments, me personally? And I think that's sometimes the bit we miss, is not explaining, the flow through from taking the checkbook away, replacing with faster payment. What does that director in that business actually benefit from?
Well, one thing I do want to touch on is open finance. Now, we've been hearing open banking has been around what feels like for years now. There's all sorts of, I kind of lost track of all the, you have to do this by this certain time, because everything seems in flux. I mean, the general part of the regulation is try and open up your APIs, don't be evil, in an absolute nutshell. So from your perspective at Moneyhub, what is open finance?
So perhaps let's start with open banking. So I think open banking is, I call it one-dimensional. Open finance is two-dimensional, and open data is 3D. So we kind of finally make it into a fully virtual environment that is spectacular. So I think we're 2D at the moment. Open banking, I think, is one-dimensional. I guess pre-open banking, I would call it like in the dark ages. So open finance is where you take on a holistic view of the customer. That's how I like to see it. So open banking is all your bank accounts. I mean, to be really strict in the terms of the legislation, it's all payment accounts. So it's not savings accounts, it's not mortgages, it's not loans. Whereas open finance is all of those, plus extending further into the world of investments. So your pension, any ISAs you might have, cash ISAs, investment ISAs, any type of accounts that you have. But I go further to even say insurance policies to do with your health insurance, your protection. So where you have life insurance, that's open finance. And then you go another step further into open data. And what I mean by that is where you as a consumer, or we here, today, all of the listeners, we actually choose everything we can put together in, to see, about ourselves. So for example, imagine being able to pull, your, I don't know, anything Google's got on you, any Google feed. So all my driving, information that Google has on me, but that I don't get to see. I don't get to see I don't know, maybe Google knows my average speed, my braking, how quick I am at braking, and how that compares to other drivers. I mean, Google could probably tell me amazing stuff about my maybe lack of a driving ability, or maybe my prowess as a driver. I have no idea. But imagine an open data world where this type of insight, into all of what we do is available for you to choose to see and pull together for your benefit. I think that's amazing. But on top of that, I don't think we can easily imagine what a world where that's accessible and available. I don't think we can easily imagine what a world would be like to live in that mode, because we've never had it. We've been siloed for so long.
I mean, I was just thinking of that there, the opportunities for that. As soon as you start down that rabbit hole, as soon as you think of a thought, you hydra it, and you think of another one of all the opportunities.
I mean, I liken it to before electricity. So I kind of think to myself, well, so when electricity, became a reality for the consumer, for the people in the street with their homes, amazing, right? You no longer have candles, brilliant. I've got a switch that I can turn my light on in my, home. It's brilliant. There's no risk of the house burning down as easily and all the rest. But, there's no way at that point you could see toasters, kettles, hot water. You couldn't see what was coming at that point. And I think that's the journey we're on a little bit with the data, is that you can't, open banking starts. So now we can see all of our, banking data in one place. So that's like turning that light on, isn't it? It's amazing. It's brilliant.
Such a good analogy. I'm a very large, I'm a big fan of Marvel. love the clip in the Avengers where Captain America, after being frozen since the 1940s, opens up some sort of panel and says, "Well, it seems to run on some sort of electricity," as if that is the lightning bolt. That's the way to solve it. With that in mind, I mean, what can this improved, not just financial visibility, but data visibility and clarity? What can that do for both enterprises but also individuals?
Well, I think the point is that clarity about anything helps you make more informed choice. I think there is a very big saying that knowledge is power. So I think knowledge comes from the data in my world. So what we've had to date is a lot of data, but no access to the insight that data or the intelligence that you need from that data. So the data is, it's a terrible analogy because it's so overused. A bit like the prevalent and unprecedented society that we're in now. But it's the same. But it is true. The data is like oil. It's fine having the oil well and mining the oil, but you've got to refine it to make it usable. And data is very similar. So I think we've had a lot of data for a long time. Enterprises, small, medium, large, and consumers have not had a lot of access to insight and intelligence on that data, which then means you can have the knowledge and therefore be able to make informed decisions or just do things differently as a result of what you're seeing.
Let's I want to follow, again, partly with your map behind you, but I want to talk a little bit more around financial well-being. But a lot of the time, especially some of the big, large incumbent banks, it almost seems that financial well-being it's almost as if it's part of social responsibility to go and do this. However, I would argue there is quite a large commercial element there to have your customers become financially savvy. So what's the opportunities with enabling consumers to kind of understand their own financial well-being?
So I think you're absolutely right. But the banks are slightly, I guess, conflicted, in the nicest possible way, in that they have shareholders that they must respond to. Shareholders want a bang for their buck. So they must respond to their shareholders. But then they've also been, given, well, not given, but, I guess told, that everyone has to have a bank account. So you've got, one is a very commercial end of the spectrum where you're running a bank for shareholders, as a business. And the other end is, where a government insists that you give everyone a bank account, whether it's viable or not. And so they slightly, they again themselves, I think, walk a slight line that's not always easy. But I think you're right. If they actually could change their mindset to embrace what you've just said, which is that actually having people in the fields of financial wellness rather than in the depths of despair, if they could see that would be a positive and a commercially viable place to be in their business for their shareholders, we'd all be a lot better off. I mean, genuinely, because there wouldn't be this tension, would there? And this, at the moment, I think you're right, it's seen as an obligation. But I think if we take a step back and think about banking is about enabling people with their money. And why are you enabling them? Well, you're enabling them to be better off, their lives, enrich their lives, enable them to get to a place where financially they're secure and well and can contribute to the world that they live in, so that the next cycle keeps coming through, right? So that's, if we could see it a little bit that way, and I think there is some merit in thinking about the circular economy, because I think if banks could think about that a bit more, they'd understand that it is like a spiral. So you can get me to the fields of financial wellness, think, okay, you may now, because when I'm in the fields of financial wellness, maybe I don't have a mortgage anymore, and maybe I don't have credit cards outstanding, and I don't have a car loan. So for them, they think, well, I'm not as profitable as a customer anymore, am I? But actually now I'm saving, now I'm investing, and so I'm actually helping them to take the next band through. And I think that's how we've got to think of it more. And the quicker we can do that, the quicker we can help people. So I would argue that you wouldn't have to be 38 before you get on the housing ladder. If we could do this a bit faster, we'd still be helping, 28-year-olds or 18-year-olds get on the property ladder. I think if we could think about it like that a bit better, we'd all be in a better place.
Equally, I remember it was Julian Sawyer back when he was at Starling Bank mentioned that 200 years ago, purely cash, when people got paid for say working in a coffee shop, it was literally, here you are, you finished your shift, here's your cash. And then of course checks came in, it became like a monthly paycheck because of batch processing. And that kind of way of thinking is almost come through. You still get a monthly paycheck, whereas the opportunity is now, because technology has caught up, you can, for example, pay people at the end of the day as soon as you clock out. Sorted, fantastic, and it's in little charges.
Yeah, I mean, I think that's the thing that we've got to get back to, is some thinking about the basics again in terms of, you know, what's viable, what's productive, and how do we make it quicker and faster and better for everyone? Because if you do that, you will make money. With
that in mind, the last thing I've got to talk about is Moneyhub. So how does Moneyhub fit into the equation?
Well, so we're a technology platform. So the technology platform focuses on enabling people to have clarity over their money, and it also enables a great level of insight. So we talked a bit before about knowledge being power. I'm a big believer in really sorting that data out in a way that can be surfaced, so that people like you and I can really benefit from that. And I don't just mean individuals, that includes small businesses, because it really doesn't matter what you are, the data gets surfaced in a way that you can do something with it. And we've chosen to do that for a B2B environment. So we license our software to enterprises so that they are able to work with their customers in a way that traditionally, without a technology platform like Moneyhub, you couldn't do. And some of the enterprises want to do what we do themselves, and they want to build it all themselves, and that's an option for them. And then other enterprises would rather license kit like this. So that's where we, you know, spend our time, our energy, and our effort. And it's incredibly exciting because, as you can imagine, every client that we work with ends up inadvertently, to be honest, surfacing new data and insights that we didn't have before we started that. So every client that onboards into Moneyhub provides another level of insight in terms of knowledge, which for me is really exciting, because it gets quicker and quicker, the insight that you can get as a business. So going back to the business that you mentioned before, where they won't come off checks, you know, I think being able to share some of the learnings and the data and the insight from companies that have come off checks, you know, is staggering. And I don't know about you, but you know, data doesn't lie. So you know, when it tells you these things, it's hard for people, you know, who are wedded to checks to stay wedded to checks, because it's not an emotional decision anymore. It's fact, and it's not you trying to convince them of something, is it?
Absolutely. Well, Sam, thank you so much for taking the time to speak with us today. Before I forget, congratulations on your CAF Bank appointment this week.
Thank you. It's very exciting. Helping us a small bank, you know, transform technology-wise is brilliant. It's something that will equally excite me, as you can imagine.
Absolutely. Well, where can we find out more about this stuff? What's the best way to reach out?
LinkedIn. Anyone can get hold of me on LinkedIn. I'm very accessible on LinkedIn. And also, obviously, Moneyhub, we have a website. Contact us at Moneyhub. You know, we have a great contact and support team that would be only too pleased to hear from people.
Brilliant. Thank you very much.